Okay, everyone, welcome back. It is Thursday, November 2nd, 2023, and you're here at PreciseAlgorithmTrading.com. And so let's talk about the automated trading systems and what happened with the markets today. So, this is the Dow futures, and it's our automated system, and this is our equity curve. So, this is the results of our trading. And we've been in a slight pullback here lately to the downside here. But yeah, even today, I think we had some back and forth trades. No, we just had the one trade, so it's negative 740 there. So that's on 4 contracts, so you can extrapolate for the number of contracts that you would be able to trade. Um, and you have to be able to weather the pullback that literally these types of pullbacks right here, which that's a $15,000 pullback, so we can trade 4 contracts. Um, if you had one contract, it would be, a quarter of that, and so let's do the math. Your overall account value has to be able to withstand that. And then on the weekends, I show you what the 12-month equity curve looks like, and it's got these in it, but most of the way it just goes from the lower left to the upper right, which is the whole point of trading. The Russell doesn't trade near as much the way we have it configured, and in fact, it hasn't traded until today since the 27th, and we did have one negative trade today. So this thing's due for a pop like this one up here. You know, maybe, or I'm wishing that into the system, but it literally, when you look at this thing on a 12-month basis, it's got these pops, and it has a couple of them. They're just kind of like equity explosions is really what they look like. So, and then we have the Nasdaq, which trades the most, but it's also it's the one with the least amount of pullbacks. But when it does have a pullback, it is pretty rough. But it's this one was over in a month, and this one over here was over in like a couple weeks. So um, yeah, this one looks great on a 1 year chart as well. And then today's activity, 11.2, right there. A couple of good winners, but 3 or 4 losers that negated that, and then some. So it would be nice if we got a bunch of winning trades for in a series. We're about due for that as well. So, all right, that's the automated trading systems. Let's flip over to Thinkorswim and take a look at what the markets did today. So over here on the left-hand side, right-hand side is the hourly chart. This is the S&P 500, including the overnight action for the futures, and it's a big rally for the last 4 days, and it's not a surprise to me that that happened after a Bollinger Band cross. We got a Bollinger Band cross here that came back up, but it only lasted a day, really back to the upside. Then we had it fall through, and then we got another one, and it got a bigger pop. So, if we literally just trade the hourly chart over here, you could be long basically anything that's the S&P 500. That'd be spiders or SPX. Let's flip on SPX without the overnight action, and you just get in when you get a cross or flip and write it up. Um, that's it's pretty simple, and then you would have been in it since the 30th. So that's that's the way this works. So and maybe this isn't the best one of these because now I'm expecting a pullback. And where do you think it might pull back to? 50% of this move would be an expectation. Pull back to there. That'll break this ATR trailing stop to the downside. And that would be just enough to get a bunch of people like bearish again. And then you go over here to the daily chart, and you see that we're already broken on the ATR stop, and we've already failed technically 2 times in a row when we tried to rally out of that. If you go back here in time, typically when you rally out of that, then it pulls back. Even here it pulled back. That's a great buy signal. It didn't make it all the way to 50% of this move, but that one's close. In fact, it looks like that's where that line is. But anyways, you buy on these pullbacks, and when they don't break that to the downside, it can turn into a nice rally. Not all the time, but that's the other thing is if it breaks it, just get out. And it goes in line with our other indicators down here, and it goes in line with our true Momo indicator as well. So, um, any momentum indicator that actually gives you the recent momentum that's going on as much in real time as you can get it. So, and here's one that breaks to the downside, and that works. These gray lines I think are actually tradable. It's red going down, curls back around. You start to see some bullishness happening while it's still red. While this indicator turns gray, you could buy in that level, set a stop underneath a pivot just to protect yourself in case you're wrong, and you can break up through this and ride it the whole way. So looking for those types of moves as well. And you can see here we got a gray bar coming in after red bars. So there you go. The NASDAQ is probably, yeah, they're all pretty good. So there's a little bit of, take a trade and hold your nose, and it is what it is. You got it. Literally, you can set a stop on a hourly chart, and if you're wrong, it'll stop out. So you're not really risking much. At some point, you have to be willing to take a risk if you're going to do this. So the Dow went up 564 points, and that's a nice break to the upside, and that's been a nice ride up. Also happened on the 30th. So I actually heard, I think it was Bloomberg today when they said, this rally's been going on for a couple days. I guess it has. I mean, the 30th, but to me, it's, at least 1, 2, 3, 4 days now. But so, anyways, it's interesting how different people read the markets or report them, as that case may be. So here's the NASDAQ, which is it's been popping as well. So now keep in mind, guys, the weekly chart over here is still pretty bearish, and we've got bearish ATR trailing stop over here. So a pull up into this zone is basically a welcoming reaction or welcome for a short on the weekly chart. So I'm expecting at some point here for this to roll over. And if you notice the futures just right now, they're down, and that's expected after a rally. And the other thing is Apple had earnings after hours, and let's look at that. We had a break to the upside. If I flip this to a 15-minute chart that shows the overnight action, we got an initial reaction to the upside, and then a pullback to the downside, and this is a high wave candle that is, as of right now, resolving itself to the downside. So this will be enough to pull back the market a bit, and we're going into Friday, and typically that if you go into Friday with weakness, that means it'll lead to Monday with weakness. So I'm expecting actually, Apple could either pull back here, we could actually do some sort of a topping candle or something like that tomorrow, and get a pullback into this zone, which would be that 50% retracement area, and then be able to rally from there. So maybe not a full 50%, maybe we'll just get a quarter of it, but somewhere in this zone would be a better buying opportunity than buying at that recent breakout, because if you look at these things, when they do break out, they tend to pull back. This one rallied hard, and then pulled back. So that's, you have to just go back on the charts. Here's one that broke out and then pulled back immediately and then rallied. So the market's moving waves, and you can't avoid that. And I think we covered all those. Let's look at oil real quick. I think I heard it went up 3% today. Looks like USO went up 1.91%. So that's a rally off the bottom, but it's still pretty red. This is one of those where you could take the trade long based off the hourly chart. You'd be going into the overnight action, and if you look at USO, it's gray and it's under the ATR trailing stop. So you could actually take a short here, put your stop above the ATR trailing stop, and if you're wrong, you just get stopped out that way. Now another thing is, why would you do that? Well, off of the hourly chart, we have lower highs and lower lows, and that would be a potential other lower high. That's the reason. Over here we have a low, a higher high after this high, a high, a low, a higher high, and then we have a low, a lower high, and we're potentially going to put in a lower low, but right now it's just unresolved. So okay, I'm going to get moving here. Two other things to look at. Really go back to the S&P for the overall market. This is that same, it's the ATRs, so again, you don't usually go 3 ATRs and go further a little bit here, but we got to the third ATR to the bottom here, and we've rallied. So you get to the third ATR on the bottom over here and get rallied. This one went through it for a few bars, and back here we got to it and rallied. So hopefully you kind of see my point. And then last but not least, this one, which is the McClellan oscillators, and we've been following these. Wave 1 down, wave 2 up, wave 3 down, which is equal or bigger than the wave 1 down, wave 3 up, wave 1, 2, 3, 4 up, 5 down. And now we've come off of that, and that ended up being a finishing wave, it appears. We'll pull back from here and rally out of that. And again, look at these McClellan oscillators. They're about at the levels that they were back here. That's not to say we can't rally a little bit more and then roll over, but look what happens once they rolled over. So just be on the lookout for expecting a rollover from here. Now we'll go to the bullish percent indexes at stockcharts.com, but it's not affiliated with us, but it's a great service. And look at, basically these are, do we have bullishness or more bullishness or bearishness in the market at the moment? And so we've flipped over to X's, I think just yesterday, and now we've tacked on 4 more new X's to the upside, up 20%. So this is quite a rally for a couple days here. And the bullishness is in compared to what it's been, of course. So here we got up 11.94% on the NYA, and we haven't changed to X's yet. So I'm expecting really that should happen probably tomorrow. That's just a guess. The transports flipped over to X's today and tacked on a few, and again we're coming off of almost the bottom down here. We got all the way down to 10% of stocks in the transportation index being on a point and figure buy signal. So that meant 90% were the other way, and the markets tend to be contrarian. The NASDAQ has not flipped it back to the upside. It's 5.93% today. I wonder how the Nasdaq's going to do it without Apple, unless all of a sudden everything else just kicks in. Because the rest of the Nasdaq stocks, as far as Facebook, Amazon, Netflix, and Google, I think are looking pretty good, and Nvidia for that matter. Here's SPX. It flipped around to the upside, up 24% today, almost 25. That's a big deal. The OEX reversed today to the upside, up 33.33%, and the NDX also flipped and up 23%. So that's a big day, and usually, again, I'm going to stick with my expectation is going to be that we're going to get a chance to buy back in with a little bit of weakness tomorrow. What could happen is we could get that weakness on Friday and a little initial reaction into weakness on Monday, and then actually spend half of the day Monday rallying out of that. Just taking out basically all the people that got in that are short, that are weak hands today to the upside, taking them back behind the woodshed, because that's what the markets do. Get you to stop out. People that have stops too tight and things like that, get them to stop out and then just rally this thing into basically the most bullish couple months of the season, so, or of the year, I should say. So, anyways, that's what I think. Obviously, trade at your own risk. This is all just educational, and whatever you do is, it's on your dime. So, um, take care, guys, and have a great night. I will catch you on a weekend review, either Friday or Saturday. We'll see you.